Now let's take a look at the bigger picture. Matthew Johnson's with us, president owner Johnson Wealth and Income Management. All right, Matthew Johnson, we're making it through the week. In fact, NASDAQ's looking like another winning week. Could be the third week in a row. What worries about recession or banks or, inflation or Fed or anything else, debt ceiling? There's a lot of balls that we're juggling in the air at this point. What did you think about the inflation data that we got this week?
Well, it really didn't surprise me too much, but first, let me say thanks for having me back on. It's good to be on. The inflation, I think that there was an expectation that inflation was going to be down probably closer to around 4.7%. And when you see 0.1%, it's kind of a feeling. But the reality is that we've got to take this win. We know that inflation is coming down little by little. It's going in the right direction. What did surprise me, however, was when you look at the PPI index that came out this morning and we see the PPI actually went up. Last month it was down 0.4. This month it's up 0.2. And I think that the market is extremely muted right now. I don't think that there's a lot of excitement about anything because we've got our eyes on what is going to happen to this debt ceiling situation. Are we going to go into default? I don't think that there's a very high probability of that when we consider that our government has raised the debt ceiling 78 times in the last, 65 years, something like that. So there's a likelihood that they're going to get past that and there's no longer going to be a stall. But I think that there is always that possibility that if the Federal Reserve decides to make good on the opportunity of raising interest rates one more time, like they've noted in their notes, I think that this is what investors are scared of.
Right, understood. So investors are nervous. When you think about the fact that a recession could be looming, what is the likelihood? You think that if the Fed doesn't raise in June, right, what are our thoughts pertaining to a recession?
Well, I think if the Feds don't raise interest rates, number one, that's going to be a good sign. That's going to boost the market overall with a little bit of optimism that, yes, indeed, finally we've gotten to a point where we can actually take a breath of fresh air. We don't have to continue to see our economy being strangled by these raising interest rates. But with that being said, we also want to be looking at unemployment, right? We know from notes and from past conversations that Jerome Powell has had press releases that we're looking at potentially seeing unemployment as high as 4.5%. And I think that that is a very grave concern. So this is something where we have to continue to guard and defend our principle. We want to be making certain that if we're investing, it's money that we can afford to lose. And I think we need to be hedging our bet quite a little and being more on the cautious side, because there's not going to be a lot of really good positive signals until we see what happens ultimately with the debt ceiling, with the banks, and then also with what the Feds choose to do next month with rate increases.
So tell me, it's during moments like this that investing for income is so vital. Could you explain that? What are you proposing for folks?
Absolutely. I think all of us as investors, Nicole, have been in this place where we just feel like our stock portfolio is just sitting there doing absolutely nothing, right? Or it gains a little and then it retraces, it gains a little and then it retraces. Well, if we think about my message every time I'm on, I try to encourage investors to be focused on income. If we have good quality stocks, good quality equities that are paying us a good 4.5, 5% dividends, even if the stock isn't necessarily appreciating or going anywhere right now because the market environment is just not, it's not really allowing and affording that, then realize that you're still growing and compounding your money. You've got income. And the beauty behind income is this. I can either take that income and I can spend it, I can take that income and I can reinvest it, or I can just sit there and hold on to that income for a better opportunity down the road. And so this is the reason why I say it's foolhardy not to look at what's happening within the bond market, realizing that there's still some really good deals to contractually get yourself into 5% plus in bonds. There's still some wonderful opportunities within the equities market to pick up good quality companies that are paying good quality dividends and pack that money into that portfolio.
Yeah, yeah. What about the debt ceiling? How detrimental could this be? I mean, how likely is it that we're going to see a change in the market action that we're watching on the daily? I mean, it's already showing some volatility, but there's talk that the debt ceiling, the longer we wait, and we've had this in the past, right? If you do a throwback to the last time we had this situation, we saw the market drop over 10%.
It's like watching a really bad soap opera to me. I understand that the Republicans want to be able to see some better accountability financially. I think every single American wants to see better governmental accountability when it comes to the money. And so they're using that as a gambling chip. They want to be able to get some sort of agreement from the other side that says we'll spend less. But at the same time, we also know that we have responsibilities as a country. And we know that the last time we went through this, we saw individuals that had their lives disrupted as a result of this. So essentially, this debt ceiling drama that's taking place, for lack of better terms, is really putting Americans and putting investors in a very precarious situation where we have to put our lives on hold while they continue to argue about that. That being said, I think that there's going to be an agreement. We always see them concede and go ahead and allow the debt ceiling to increase. It doesn't make it right, but at least it moves forward and we can put that behind us and move on to more important things.
All right, Matthew Johnson, great to see you. Thank you. Johnson Wealth
Thank you.
and Income Management. Thanks.